Morning, guys. It's Wednesday, June 4th, 5:30 a.m. Central Time. Grain market's a little bit higher across the board this morning. July corn futures up 2 1/4 at 440 3/4. July soybeans up 3 1/4 at 1044. July Chicago wheat up 2 1/4 at 538 1/4. July Kansas City wheat up a half cent at 537 1/4. July spring wheat up 1 3/4 at 619 3/4. At least one weather model has turned dry for the Corn Belt. Let's start there.
The most recent run of the GFS model calls for extremely limited Corn Belt rainfall during the 8 to 14 day period. This is only one model run and could be subject to change. The 8 to 14 day Euro model offers significantly more rain and calls for only slightly below normal rainfall across the Corn Belt. Rainfall over the last 72 hours has favored eastern Nebraska, western Iowa, southern Minnesota, eastern Kansas, Missouri, Wisconsin, and western Illinois. The radar is active again this morning.
All right, let's go back to that first map. So we have one run of one weather model that has turned really pretty damn dry for the Corn Belt. This is a great map from our friends at Crop Profit. During the 8 to 14 day period, based on GFS model data, our friends at Crop Profit estimate that the U.S. Corn Belt overall will see only 22% of its normal rainfall. This is one single model run of one weather model. And of course, it's subject to change. It does not line up with what the Euro is telling us. It does not line up with what the GFS ensemble is telling us, but this could be a hint of things to come. This GFS model is updated 4 times per day. And by the time you guys see this, it's updating right now as we're taping at 5:30. So by the time you guys see this, there may have been another model run or maybe even 2 additional model runs. It updates again 4 times a day. So we'll see if this verifies or if this is just one kind of bad set of computer data. The difference between this GFS and this GFS ensemble is that the GFS, the first map calling for the dry conditions during the 8 to 14, that's just one single model run. The ensemble is like they kind of aggregate a whole bunch of different model runs and try to throw together a forecast that essentially eliminates some of the risks and flaws perhaps of one model run. But is this something to be concerned about? I don't know. The markets don't seem overly concerned. You've got corn futures up 2-3 cents this morning, soybeans up about the same. That's not a weather rally. But if this thing verifies and starts to shift drier, yeah, that could be a problem, and the market will take notice. You look at the 1 to 7 day, and Western Corn Belt's kind of drier again. I mean, overall, above normal rainfall for the Corn Belt, and that's the same for the GFS, the Euro. No matter which one you look at, Iowa, Nebraska stay dry. And the forecasters, guys smarter than me, have said, if there is a risk this year, a drought risk or risk of dryness, it's going to be those Western Corn Belt areas. And yeah, they did catch some rain, but the forecast is kind of hinting now that they're going to again turn dry. So this is something to be monitored. Again, that GFS deal, it's one singular model run. It updates 4 times a day. We'll see if it verifies, non-verifies. We'll know more tomorrow, and we'll probably talk about it again tomorrow.
Smoke from Canadian wildfires is deteriorating air quality across parts of the northern U.S. As of Tuesday, over 200 wildfires were burning across Canada, with roughly half classified as out of control. The resulting smoke has spread from Minnesota south to the Gulf of Mexico and east to South Carolina. The entire state of Minnesota remains under an air quality alert through this afternoon. Dangerous air quality conditions are also forecast for Wisconsin and Michigan. While short-term smoke exposure typically has minimal effects on crops, prolonged exposure, especially during key development stages, can reduce yields and affect crop quality.
I'm no agronomist, but I know that the temperatures have been cooler than maybe some people would like, and this is not going to help with that. The smoke blocks sunlight. It can present problems. I'm very curious to know what you guys think. If you're in, Wisconsin or Minnesota or even parts of eastern Iowa, it looks like, and this is going to be an issue for you. Let us know if you think there's an impact. Maybe it's too early in the growing season to matter, but I don't really know. If this were later in June or into July, maybe that would be a problem. I know that in 2023, when we were hot and dry there during the summer, we had wildfire smoke, and there were people who thought that the wildfire smoke actually kind of bailed us out in terms of the crop, and without that, the crop might have been much worse. So I think there's varying degrees of impact and things that can happen with this wildfire smoke. So I don't know much about it. Drop me some comments.
If you guys have not checked out our premium content, you sure need to do so. Joe, can you tell our viewers about some of our recent premium videos?
When corn rallies happen late, this was yesterday's video. So on average over time, the December corn contract tends to peak seasonally around June 8th or June 9th. And that's the set of data dating back 15 years and 30 years. They both line up for that date. It appears highly improbable right now on June 4th that we post a seasonal peak in the corn market on June 9th, 5 days from now, right? But you got to remember that date, the June 8th, June 9th, that's the average. So that means that in a lot of years, or in some years, you're going to peak before that. And some years you're going to peak after that. And that's how you make the average. When corn rallies happen late, I talked about years in which the new crop corn contracts rallied later, what caused the rallies, why they rallied, and what happened. This was a good, I was told it was a good review of some past years that could perhaps be analog to this year. And I'm trying to be an optimist here. I know the market sucks right now, but things can change very, very quickly. Our Sunday night weather videos will go out every Sunday at 6 p.m. Central Time between now and say the probably third week of July. Pete Meyer does them. And as I mentioned yesterday, you want a market person doing your weather update right before the open on Sunday, because you want somebody who can look at the maps and tell you what they mean for the market. And that's what Pete's going to do for us every Sunday for the next month and a half or so. If you guys want to see the premium stuff, go to standardgrain.com. You can sign up this morning. This is a $50 per month subscription. You can cancel at any time. There's no other fee, no other obligation. Nobody will try to sell you anything else. Just a ton of info direct from us every single business day. All of our premium videos, all of my cash grain marketing recommendations, tons of info on everything that affects your farm. We've done a lot on transition planning recently. We do a lot on policy. We do stuff on crop insurance. We're going to cover some agronomy tomorrow with my friend Lewis Stearns, who's an agronomist in Ohio. We're going to talk about the situation out east and some of the problems there. Give that deal a shot this morning, guys.
Despite challenging grain markets, U.S. farmer sentiment reached its highest level since May 2021 last month. Purdue University's CME Group Ag Economy Barometer Index rose to 158 in May, a 10-point increase from April. The improvement reflects growing optimism among farmers regarding both current conditions and future expectations, stronger confidence in U.S. agricultural export prospects, and a less pessimistic view of tariff policy helped drive the positive shift in sentiment. However, farmers remain concerned about the impact of U.S. tariff policy. 43% of respondents said they expect tariffs to negatively or very negatively affect their operations income this year. While that number is still relatively high, it is down from 56% in April.
So corn prices, just as an example, corn's our biggest cash crop in the United States, right? Corn prices traded like north of $7 in 2022, and today they're $4.40 on the board. And I'm supposed to believe that the ratings are, or the sentiment is higher now than it was when corn was at $7. I don't know the people who put this together. I'm assuming they're academics and perhaps slightly out of touch with the real world. Is that a bad take?
No, I would say that's spot on.
I'm just shocked by this every month. Every month it comes in, I'm
yeah.
like, WTF is this, you know?
Yeah, I totally agree. The headline shocked me.
I could send out a survey to my premium subscribers, and in about 10 minutes, I'd get you a better reading of farmer sentiment than what this is, because this does not make any sense to me. They did have a couple charts that I thought were interesting. How strongly do you agree with the following statement? Free trade benefits agriculture and most other American industries. Yeah, everybody agrees. Okay, I agree too. Over the next 5 years, do you think agricultural exports are more likely to increase, decrease, or remain about the same? And everyone says increase, so I guess they're optimistic about the outcomes of the trade war with China and that sort of thing. I don't know, but I'm almost tempted to just say we should stop using this in the podcast, because I don't are we just going to throw it in to criticize it every month? I mean,
I don't know. It's probably a little entertaining, but it's very disconnected from
reality. Is it entertaining? I'm not entertained.
Your comments are entertaining.
I'm not entertaining.
Ukraine's grain production is expected to decline substantially during the upcoming season, according to the country's agriculture minister. Total grain production is forecast to fall by 10% to roughly 51 million metric tons, while oilseed production is projected to drop by 5%. Adverse weather conditions, including an unusually warm winter and excessive rainfall that delayed spring planting, are largely to blame for the decline. Additionally, the ongoing war with Russia continues to disrupt crop production. How did
we lose Mackenzie there? We've been having some internet problems today. I guess I'll finish this solo. So Ukraine may have a slightly lighter crop, and that's all right. The one thing that I wanted to make clear today, without getting too much into the nitty gritty of Black Sea agronomy and agriculture, is that Black Sea wheat exports have seen essentially no decline following the war. The war has had little to no impact on exports. As As a matter of fact, they're exporting more wheat out of Russia and Ukraine now than they were pre-war. So we get the question all the time, Joe, there was this Black Sea conflict. Why didn't the wheat market rally? Why didn't the wheat market rally on Black Sea this, Black Sea that? It's because of this. They keep shipping wheat despite the fact that they've had war. We got one more story here. The White House continues to press U.S. trading partners to reach new agreements. The Office of the U.S. Trade Rep sent letters urging all partners to submit their best trade offers by today, I believe. The letter also requested commitments on import quotas for U.S. goods and plans to eliminate non-tariff barriers. The administration has not disclosed which country received the letters. It sounds like a whole bunch, though. Treasury Secretary Scott Bessent confirmed that negotiations are underway with several countries, including Vietnam, Japan, and India. Trump's reciprocal tariffs, which were put on hold for 90 days, starting in April to allow time for trade negotiation, are now scheduled to take effect on July 8th. Trump was talking yesterday or overnight about how it's difficult to deal with China and they're difficult to negotiate with. So I don't know. We'll see what happens. Outside markets this morning, the Dow's up 50, the S&P's up 8. Treasuries are mixed. U.S. dollar is pretty quiet. Crude oil is unchanged. So not much going on. Have a great day, guys. We'll be back on Thursday.